Hello there. Today we are going to be looking at two similar pharmaceutical stocks from the healthcare sector. The two stocks are Pfizer and Abbvie Incorporated. We will be primarily doing an analysis based upon their price to earnings ratio, dividend yield, and future revenue potential. The PE ratio is how much earnings a company produces relative to their stock price. Pfizer has an attractive PE ratio at around 13. Abbvie's is a bit worse with a PE ratio, upwards of 40 times earnings. Therefore, we like Pfizer more in terms of PE ratio. Moving on, it looks like Abbvie has the better yield at about 5% compared to Pfizer's 4.2. However, before we go chasing yield, it is important to look at a company's payout ratio. Payout ratio shows us the proportion of earnings paid out to shareholders. If a company has a high payout ratio, they may not be able to support or grow their dividend in the future. We can visually analyze the payout ratio of Pfizer for the last 5 years by putting annual EPS next to their annual dividend payout. The last 3 years, they were able to cover their dividend with an average payout ratio of 53%. This is great for dividend growth investors because we can assume they will continue to safely grow their payouts in future years. Here is Abbvie. The last 3 years, they were paying out almost all of their earnings with an average payout of about 94%. While it is nice to receive the big dividend, it makes us a little concerned whether or not they will be able to grow it or even maintain it at its current yield. In addition, it really limits the company's ability to reinvest earnings back into the business and grow revenues for the future. With this information, we can feel safer in Pfizer's dividend and their ability to growing it. This leaves us with future revenue potential, and how pharmaceuticals generate revenue is through the drugs or vaccines they sell in the market. A very important thing to notice is when the patent protection on these drugs terminate. Losing patent protection means that other competitors can replicate the drug or vaccine and consequently steal market share with their own forms of the same product. Pfizer has many products, with their top ones being Prevnar 13, Lyrica, Ibrance, and Eliquis. This happens to be 2018 revenue because 2019 data was not available yet. But for our purposes, this 2018 data still works fine for our fundamental analysis. Lyrica's patent ended in 2019, but most of their revenues can be expected to be maintained due to patents for their top products not expiring for a few years. They have many products contributing to their revenue, which is a great sign for investors. Abbvie has most of their sales coming from one product. This one product comprises over half of their revenue. The patent already expired in 2016, but due to some clever legal proceedings, its domestic protection will continue until 2023. With this one product dominating most of their sales, it makes us worried as investors whether or not they will be able to come out with new products in time to recoup any loss in sales once the patent protection ends. Therefore, as of now, we feel much safer with Pfizer's potential to maintain future revenues. It is important to note that this video is just for educational purposes. You should always talk to a CFA or do your own research before making any kind of investment.